What's up, guys? Happy Sunday. Just turned down the techno a little bit. How you guys doing? Everyone can hear me loud and clear? Get started in a minute or two. Just pull up the chat. What's going on? What's going on? CME is opening soon, so we'll be around for that open, and we'll see if anything good comes of it. Yeah, thanks for the compliments on the intro. A really talented girl from the UK ended up doing this for me. So her name is It's Senpei Art. I shared her on my Twitter a few times in the last week, so if anyone's interested in using her services, I highly recommend her. She's very talented. She put this entire thing together. I gave her a couple ideas, and she came back to me with this on the first go, and I think that that's quite impressive, honestly. How's the background noise? Oh no, I did not enjoy the donuts. Okay, so I ended up so I was doing some stuff in a part of the crawl space that's in our house. I was capping a wire, and I had to run to Lowe's. So I ran to Lowe's, and when I got back, the dog ate the entire box of donuts, minus one donut. So we had half of a donut, and the dog ate, I think there were 6 total, so the dog ate 5. Sound is good though? Cool. All right. Let's get to the main event. Yeah, so the dog ate the donuts, unfortunately. All right, so futures opens at 6. So we got 13 minutes. So I'm going to get this stuff out of the way quickly. It's going to be a really casual stream. I haven't streamed on a Sunday in a long time. I appreciate all you guys for showing up. If you're not subscribed to the channel, make sure you hit the subscribe button. All right, music is a little loud. Let me turn that down. If you're not subscribed, hit the subscribe button. I would appreciate it if all you guys hit the like button. I'm trying to grow this channel. I normally go live on either Monday, Tuesday, or Thursday, so 2 days a week, but I figured I'd hop on here for the open. Dog will have diarrhea for sure. This dog has tried everything. So this dog ate almost the weirdest thing that she's eaten so far has been clipper oil. So we have clippers for the horses, so they're like industrial grade hair trimmers. And there's an oil that we have that's a big bottle of oil, and it's used to lubricate the clippers. And she drank and ate that entire bottle of lubricant, and that was quite disgusting and quite interesting because it just leaked out of her for the 2 or 3 days that followed. YOLO'd your life savings on Doge, and now you're a millionaire. Easy, good for you, man. If that's true, good for you. Okay, so hit the subscribe button, hit the like button. Before we get into it, as a reminder, none of this is financial advice. This is strictly for entertainment purposes only. Obviously, it's just my color on the market, my opinion on the market, and that's it. I appreciate you guys showing up, though. We'll get started. Before we get started, let's just take a look at what you have 1 day left to sign up for. So if you haven't been on Phemex yet, I think it's a phenomenal exchange. I've been partners with them now for quite a long time. You know me, I don't jump from exchange to exchange. I've been partners just this exchange. So I haven't worked with anyone in the crypto space, obviously besides Rager. But I think the team is phenomenal. I think the exchange is phenomenal. And now they have more liquidity than Bybit if you're trading BTC, ETH, and the other majors. But there is a trading competition, and yes, I have a team. So if you're interested in signing up, there are just a few hours left where you could sign up. So well, the link is here. I will post that on Twitter. Or no, actually just go to my Twitter, scroll down, and you'll see that there is currently a link there if you're interested in signing up. So this should be fun. I normally couldn't give a shit about trading competitions, but I think that this one is kind of arriving at the perfect time. And again, it's just for fun. This is not something that we're going to be very serious about. But if you want to try the exchange out, there's currently a bonus that is attached to the link below. So I changed the link so that it's a little bit easier on the eyes. So you'll see a link on Twitter that says tradephemex.com. That's not a scam link. That's just a redirect link so that you don't have to see a link with, you know, a bunch of numbers and weird digits at the end of it. All right, so be sure to check them out. Futures, spot, and over 120 pairs now. So, as I said, we're going to be taking a look at, well, we'll just leave the BTC open, the chart open for now. Just some points really quickly. We have 9 minutes before market opens. And again, on the other screen, you saw that I have my traditional futures exchange open as well. So, well, it's the CME, but I have it's Edge Clear, it's Edge Pro X. This is trading the this is for access to equity index futures. So I started trading the ES again. I haven't gotten around to taking any trades in anything besides the ES, any of the other products on the CME. So for example, like the NASDAQ, the Russell, any of the minis, but we'll leave that open if any good opportunity presents. If you guys are interested in trading legacy futures, I could give you some tips. Not going to be any tips about who to trade with or, setups in particular, but just some things to understand if you're going to be trading legacy futures, trading through the CME. I'm not talking about trading on some dog shit exchange like Prime XBT and trading like, fucking CFDs. That's garbage. I'm talking about trading the actual product through the CME. So just some points really quickly. Get some levels on the high time frame that haven't obviously changed much. We'll go over obviously my thoughts on the low time frame or just the mid time frames. But markets right now are still, as a whole, I think, pretty pessimistic. Technicals look good in legacy. We're in a good period in terms of seasonality for how the market normally performs at this time of the year and especially into midterms. And not only do we have the market looking good from, let's say a technical and a seasonal standpoint, but we do have the market looking good in the face of what has been some continuously negative news and some poor earnings last week, in particular a pretty nasty move by Amazon. So Amazon shit the bed. I think it was 20%. I think 20% right after earnings released. That was quite disgusting. So that's a pretty good indication of the overall level of liquidity in the market right now, or rather lack thereof. When you have stocks that are, nearly a trillion dollar asset. I don't know what Amazon's market cap is actually. Speaking of that, is Amazon over $1 trillion still, or I don't know. You know what? I used to remember all these details before everything took massive haircuts, and now you have things like, for example, Facebook Meta, which was top 20 and now is completely off the map. So absolutely crushed as well. But Apple ended up saving the day. So I say Apple saved the day in terms of earnings. Not that they were fantastic, but that Apple basically is the index. And I say that, somewhat seriously, because Apple represents around 6.5%, I think 7%, or maybe 7%, 7.5% of the S&P 500. So that's quite significant. That weighting is 2x anything else, or the nearest pair. I say pair, like we're talking about cryptos. And what is that? Is that Microsoft? I can't think off the top of my head. Is that Google? Is that Amazon? Either way, significant portion of the index. And if Apple was to miss on earnings, that's obviously anything that's poor for Apple translates to being poor for the index because it's a component. So that's what you have to remember whenever you're trading something like the ES. If you are going to be trading the ES, you're not trading one product, you're trading multiple products that make up the index. So there is a degree of survivorship to the index, but those internals do, those internals rather represent the possibility of idiosyncratic behavior within the index that can throw it off. And again, Apple being one part of it, but a very significant part that does have a meaningful role in the overall index's return. Okay, so let's leave the other chart open, or rather the other screen open. There's a couple levels we'll go over. I want to save this for after market opens, so we got like 5 minutes left. We could shoot the shit if you guys have any questions. BTC right now, as far as ranges go, lowest daily close, we're just gonna kind of eyeball this. Lowest daily close is around 18,447. Highest daily close is 24,500 area. Mid range around 21,003 to 21,007. So what you're looking at right now are monthly profiles. You could see that we have been, in the last 2 months, value had been established in relatively tight area. So between 20,000 and 18,008-ish. Finally broke out of that to the upside into this low volume region as of the last 3 months, an area that hadn't been transacted in much. We had a very sharp move up, sharp move down, but hadn't spent much time there. The level that we're coming into contact right now is, again, right around, if you're just going to eyeball like mid-range, and also one of the highest volume nodes within this entire structure. So if we add this and then just kind of tag where that high volume node is, that's where you're looking at right there. So reasonable to expect some overhead resistance here. Whenever we were streaming the last few weeks, I kept talking about this, let me open up my drawing tool. Kept talking about this. Come on. Here we go. 20,005, 20,006 level. Acceptance above that, leading to a pretty sharp move up to 21,002, 21,003. So we didn't exactly get the kind of, we haven't had the transition that I expected. So we're going to go over that. Again, I'm just kind of breezing through stuff fast because we have 3 minutes before market opens. But this midpoint that we're at right now, from the standpoint of being mid-range, this entire structure, multi-month structure, multi-quarter structure, and also one of the highest volume levels. So one of the most significant levels from a participation standpoint. Most of that goes back here because you can see that there's a lot more dispersion here, a lot more pivoting that took place at center point, or that center point right around mid-range, than what we've had more recently, where we've spent the majority of our time in the bottom portion of the range. So that's BTC. ETH, lowest daily close is right around, and I'm just saying these levels because these are the most significant contextual levels. ETH is right around 991. Highest daily close is around 1983. I think for all intents and purposes, though, range high is 1800. So if you look at ETH's range, just looking at where we spent the majority of the time at the initial low, where we've had the majority of interaction at the highs, the underside of this prior structure, most significant pivot on the chart, dating this back to this weekly level. Weekly close is slightly higher, but the lowest daily point on this level, extending all the way forward, this consolidation right here. I just think this 1800 level is probably the more significant line on the sand, rather than waiting for something higher, which would be, again, the higher daily close. The highest daily close is further up. So point is, if you ended up accepting above 18, I think that that's more significant. You don't have to necessarily wait around for this close up here to be interacted with. Okay, we have 1 minute left. Currently, ETH is at the highest volume node within this entire structure also. So that's important to point out as well. Extending this forward, HVN, POC, gap in the center right there, but the highest volume node is the level that we're kind of rubbing into right now. All right, futures are about to open in a second, so we'll just watch the open. I'll look at the chat, and then after, you know, a minute or two after the open, we'll go into more specifics. So about the S&P though, if you're trading the ES, you could trade minis, you could trade the E-mini. If you're trading the ES, okay, it's 25 cents a tick. So moves in quarter increments of a full point. That's $12.50 per contract for that move. Okay, so one contract represents $50 times the current value of the S&P. So we're looking at around $190,000 a contract notional, $200,000 a contract notional. That's for one contract, if you're buying one contract. All right. We'll switch screens, actually. Okay, so that's just one contract. So if it moves $1 against you, that's $50. This is not, as you can see, this trades much differently than BTC. These might be, obviously these are correlated, but there's a lot more activity that takes place on the low time frames, zoomed in when you're looking at the S&P. Now, mind you, this is where more trading volume occurs than anywhere else, unless you're talking Forex. The S&P absorbs more optionality than anything else. This is where your, creme de la creme of HFT are trading, low latency, high output. This is the toughest place to trade. Crude oil, the NASDAQ. If you are trading one lot, again, that's roughly a $200,000 notional position that you're picking up. I am using Phillips Capital as my FCM. Introducing broker is Edge Clear. Just be mindful, if you are trading these, it's not like trading on a crypto futures exchange. You're trading through the CME with this, and you can go beyond your bankruptcy price, right? If you are short and you get blown out, you could literally go into debt. So that is something to consider. Some other points. Higher margin requirements for this. Much deeper liquidity, though. So much deeper liquidity. We're talking you could hit this with $200 million, you know, a 1,000 contract position, and it could absorb that in a single tick. Other than that, being a deeper market, the execution speed here, it obviously depends on what kind of software you're using, who you're, you know, where you're getting your data from. All of that plays a role, but it's miles ahead of anything in crypto. Let me just look at the chat real quick. So I'll put on the main screen because then you'll be able to see. So we opened up below where we closed last Friday. Adjust this a little bit. So this chart that I have on, one sec. This chart you're looking at right here, this is a 1,000 volume chart. So 1,000 lots, essentially, per rotation. And then I have a 15-minute chart with a volume profile, and then we have our TPO up top. You know, I'm going to zoom in a little bit. As you can see, that TPO chart, that structure of the S&P is pretty ugly, pretty weak, right? So if we're looking at this structure top right, most of the volume being done at the top and not much structure on the way up. So this is something to be mindful of, whether or not we kind of are going to traverse that gap before tomorrow's cash session open. So tomorrow's regular trading hours. These are obviously weekend hours. These are not RTH or regular trading hours. So we'll just look at this for a minute or two more. So the S&P last week closed at 39.01. So we're going to have a little bit of an overnight gap if we ended up continuing like this. So as you can see, I don't know if you can see on the bottom right hand corner on the ladder, I have presets already. When I'm trading the ES, when I'm trading any kind of index future or anything rather through legacy, I absolutely want to make sure I have a hard stop. A lot of the times, you know, I will still monitor positions like in, you know, trading BTC. If I'm trading smaller sizes, I will monitor them and manually stop myself out. But I almost always want to, you know, I want to make sure I have a hard stop because this can move against you a lot faster than, I just feel like this can move a lot faster than BTC. It can get ugly much quicker. And with BTC, I have some kind of ideas, the recoverability of a certain move. Whereas with this, I want to make sure that I'm stopped out. And a lot of times my stops are going to be anywhere between 8 and 12 ticks. All right, I think we could actually just get into, let me just look at the chat real quick. And then I want to zoom in on one screen because otherwise I won't really be able to point out some of the details that I think are worth mentioning. Okay. So some size coming in right now. As you can see, I have it highlighted. 100 lots, 92.50. And I'm going to be paying attention a little bit more to the developing volume profile trading the ES and the footprint than I normally would if I was looking at BTC. So a couple other things real quick, and then I'll get to another screen. Same sort of setup as BTC. So footprint chart, TPO, volume profile on like a 30-minute or an hour, and the CVD. And then as you can see, I also have a speed of tape. So speed of tape, I have this set to show me when the tape speed really begins to pick up, possibly capping or indicating rather some kind of exhaustive move. This has to be not on its own. It has to be with other information that I'm waiting as well. It's just kind of, it's useful to see, all right, you know, we're at a speed that normally we see things kind of mean revert at. And this is not something that you could just take for, again, on its own and say, oh, okay, tape speed is above a certain value. You know, you have to start fading it. I have it set so that, as you can see, I'll change the color so it's a little bit more obvious in this color setting. It'll color the bars as well. Herman Miller chair, yes, that's what I use. All right, so let's get down to a different screen because it's tough to really go over things. I just wanted to watch the open. We'll go over the nitty gritty though. All right, so BTC, high time frame, like I said. We'll go over BTC first. I have ETH, Atom. One sec. All right, so highest daily close, lowest daily close. That should be kind of obvious to everybody. The thing that concerns me about this, so I've been saying now for quite some time, so we'll stay zoomed in because this is really what's relevant. You know, things got really compressed over the last few weeks. So going back into, you know, the middle of September to almost the entire month of October, we really began to tighten up. So this is a pretty clearly defined range, right? You know, for the last few streams, we've been somewhere around here talking about still being around mid-range. There's good trades to take intraday, but the more significant moves would be, and you know, so far are, would have been above 25,005, I was saying, and 20,006. So there's a few moves between there that we talked about, the move from 20,000 to 20,300. My thing was, I thought that the move from 20,005, so from here, so this high basically, would have led to a much sharper and sustained move up. So looking somewhere, you know, I initially said 21,003, 21,002, but a move further up within the structure, because again, this was a weak structure. This is a, you know, pretty one-sided, unchallenged move down. And also because throughout the entirety of the structure, it looked like we had a significant build-up in open interest. You know, and if you have a structure that's really capped off on both sides, you allow people to get in positions without much testing. When you break free on one side, you end up putting one of those larger commitments, one of those sides, you put their feet to the fire, right? And that's when you see a more significant move. So you've been defining a structure for a long time now, accepting outside of it, above the extremes, whether it's to the low or to the high. The longer you move sideways, the longer you build that up, the more likely are that you're going to get some kind of violent move and some kind of initial continuation, right? You at least don't want to fade the first leg. So what I was looking at when I'm looking at the structure, I kept talking about the open interest, right? So bear with me. Let me change the background color because it is later now. It's easier on the eyes. Not too light though. Something like that. Let me just exit that background music because that's all right. Here we go. Some adjustments. All right. So here we are. Here is the entire range. So put on a 4 hours so it's a little bit easier to look at. So here's the range we're looking at, right? Big rejection at the highs, large move down towards the lows, hanging out at the lows, consolidating again at the lower portion of the larger range. So if you had a large range and you split it in half, you know, at the midpoint, upper range, lower range, we're carving out the entire portion of the lower range between 18,000 and, you know, 20,000. So 17.8, 18,000, roughly same area. So throughout this structure, I was talking about the increase in open interest, right? So specifically that even though we were moving sideways, there were periods where we were moving up, right? Where you had that pickup in open interest, kept referencing this point right here. You had a CVD that was fading down, right? You had funding that kept going predictive negative. So this basically indicating that there are people aggressively selling the highs, and also it seemed like there was a good amount of absorption at the highs and that there were entities building, in my opinion, larger short positions passively, right? Whether they're hedging, whether they're outright shorting, maybe they're just hedging, either way. So I strengthened my argument for this increase being mostly on part of sellers, right? Because when we ended up retesting that low, where that began, we didn't really see a drop off in open interest. So I was thinking, okay, if there's a significant pickup in participation and you're still within the confines of a range, if you get a move towards one extreme above the high, you know, in this case, below the low, if it is the case that this was longs on the way up and we saw that open interest increase occur because of longs. Well, if you end up probing this low by, what was it, 4 or 5%, then shouldn't we see some of those longs get stopped out? A significant portion of them, at least, if we're beyond where all of this came in, right? So that being right here. So we swung below that right here, and there was really no meaningful change to it. So what I was thinking was, all right, because of the behavior and flow each time we move up, and me thinking that there's a person, not person, but there are entities that are absorbing this, it's probably the case that you have to get that pain is upward and that someone's invalidation is up here, and that if we get above there, then we'll maybe see this begin to deplete, and we can make a case for, you know, a more significant amount of shorts closing out, yada, yada, yada. You think you get the idea. So my thing was, start looking for that closing out, you know, short covering behavior above that high. Because if this is the cause of that increase, right, we never came back to test that high. Whoever built up here, right, their invalidation is it's definitely not within their structure, right? So this kind of continued to drift up. We had a couple moves down, continued to pick up, but we never got past that extreme. So if we get past this extreme, you know, I'm thinking things are going to look pretty slippery. We're going to, you know, glide through that low volume region effortlessly, and we'll start seeing short liquidations come in. And instead, we got to move above, and there's really not much, right? If anything, you've had, so look at this move right here, right? Let me mark this with drawing tools from the platform. So this is where the open interest increase began. All right. We're almost all the way back down to that point. So we're beyond halfway back down to where that positioning picked up. And that decrease occurred on dropping prices. So what this almost looks like is longs just taking profit. So, right? Longs taking profit, the larger moves down, corresponding with big dumps in price. And it's not the case that it looks like shorts are covering to, you know, cover their ass before a larger move. At least it's not what it necessarily looks like to me. So it looked like longs were taking profits here. Okay. And then the following move, we started getting more derivative longing. So I don't know. I'm not as confident in this move anymore because, I mean, not for nothing. If this was the start of a larger move, I don't want to see, you know, longs taking profits in a small move like this, right? You know, just above this high. I want to see, if anything, that it gets continuously challenged by sellers, and we're building up shorts, we're building up positioning, you know, funding is going increasingly negative on these moves above this prior high, and then we're going to further squeeze off of that. Instead, it looks like longs are closing out, and it's possible to, you know, you can say that those longs do represent future buying power. Like if price continues to move up, you know, they're sidelined now and they'll buy back in, and that'll help them move up. I don't know. It looks kind of wimpy above the level. So that's my thoughts. Just, I've been kind of harping on this particular detail about open interest. So I figured it'd be important to kind of go over that because it didn't transpire the way I anticipated. So instead, again, I thought that all of that open interest meant, right, since it didn't get hurt on this move down, and normally it would, I considered that most of the pain would probably be above, and it was some kind of larger hedge invalidation or short invalidation above 20,600. But we got to that price, never really got in, you know, any kind of slippery behavior. And again, this is not a, you know, from a profile standpoint, there's not a whole lot that should get in our way, right? At least we should be able to move up to 21,003, 21,002. You know, and I don't want to write it off right away because this is a, you know, an important support and resistance flip. So this level had been established for over a month, right? Range highs, range lows. You know, we've had one test of it. You know, a lot of times if you're going to get a retest, right? But it might be after some time has passed, right? So price would normally be a little bit higher and then retest. But we've had an initial retest and we've taken the high, and now we're sort of, if you look at this entire structure, around the midpoint, kind of going for the second retest, or it looks like it's on the way to retest that again. So I don't necessarily like that this 20,300 level could possibly be being retested for the second time in less than a week. Does this all make sense? And if you look at spot CVD, for example, so look at price, the high, almost equal highs between these two rotations, right? So this multi-day rotation, next multi-day rotation, not taking us higher, slightly higher with this small wick. But if you look at CVD, all right, spot CVD has made a materially higher high. So it's not the case that it's kind of just barely above the high the way the price is. Instead, there's a lot more buying on the right side of that structure. So someone is still selling that. So it could be a combination of derivatives taking profit right now, spot taking profit, and then it's not necessarily the case locally that there is any kind of real sign that sellers are now getting absorbed, right? So no major sign in future CVD. Looking at, again, this is Binance. If you look at these individually, it's kind of just doing what price is. And if anything, so here's something to pay attention to. So here are FTX, Binance, and Bybit. There is a lower high on CVD. That was after what I assume was profit taking. So it just looks like now actually also you have spot getting absorbed and there's not necessarily as much buying momentum, period. So buyers getting absorbed, right? Not as much buying momentum there either way. So it just kind of looks weak. So it could be a completely different story if we end up rotating back down as low. Funding starts to really go negative again, and there are really clear signs of absorption. But I don't think necessarily we have. There's a case to be made for that yet. So as far as the last few days, 1, 2, 3, 4, 5. 5 days. Here's your composite. So between 20,900 and 20,300. The lowest close right around 19,000, or rather this local low, 19,967. The lowest daily close in this pivot is 20,227. So I think that, you have to, one sec, take off these. Actually, I'll leave those on. I don't want to mess with this too much. I'll just go to the higher time frame chart, top left. I think you absolutely have to see that this low holds. So for example, again, like I said, these are just my thoughts based on what I'm seeing, right? I'm not saying that this can't continue to hold and we can't continue up. Again, this SR flip so far is holding. But I think it is really contingent on a level that we're now approaching again, right? So this daily level at 20,277, this is a must-hold level in my opinion. So if you're closing below this level again, you're kind of closing back above, back underneath the top side of this range. Well, then the most likely thing that happens is what has happened every time we've done this in the bear market, which is if this was, a carved out range right here, you're accepting through the top, and you're again just likely to fill out the center. And the chances are with each failure that people become more and more bearish. And it's possible that, we see a sharper move back down to the lows or at least somewhere in the 17s. So real quick, acceptance below this low after we've just taken this high. I don't want to write this level off, right? So I would still look for something to buy at this close. But if we do get an acceptance back within this range, I think that you get more than a move, honestly, to the lows. I think that this is one that I would say on balance probabilities has a higher likelihood of actually revisiting somewhere within the 17s. And it could get slippier from there, but play it as it comes. So this close has to hold. And if you look at the last few days, so relatively balanced, imbalanced move off of the lows, the local levels that you're dealing with, right? If we start breaking back below 20,005, you're more than likely going to fill out this, what was this trend day. So acceptance below 20,005, that's the last 5-day composite, value area high, value area low. So value area low, value area high. Again, momentum really beginning to wane. So chances are, if you do accept back within this trend day's value, which is right there, so below 20,005, that we end up revisiting that POC right around 20,100, 20,000. So daily close level is 20,277. I would honestly look for possible fake outs down there. So if we do, fall down this level, I would look for the fake outs, right? Signs that maybe sellers are getting overcommitted for a possible mean reversion up, but it's not necessarily a level I would want to see us reapproach for the bigger picture. Now the low of that structure is 19,959. So it's possible. It's on, this is the daily close. So a daily close through that level is one thing, but what's more than likely is what you're going to have some kind of interaction at that 20,000 level, that round, very obvious round number. So that might present some kind of SFP for at least a short-term trade, where I would expect you to at least come back and test that POC of that day. But like I said, doesn't necessarily look good the way it is right now. Just give me 1 second. Okay. Let's take a look at ETH. Well, let's actually take a look at the S&P, because we started off watching the open in this. Nothing right now that I would want to trade based on where it is. There's a few things about this. It is at the most significant level on the chart that we've been talking about now for however many weeks since we were holding these lows. Kept talking about how I wouldn't write this off in any direction at these lows. You're going to get a lot of choppy behavior. But if you end up holding these lows, the next logical area to expect us to come back to is this prior range high, highest weekly close, major pivot, extending all the way back to June. So that's right around 30,000. That's right around 30,000. That's right around 3,900. All right. The move that we put into that, so Friday's close, not the most attractive distribution. So this is the volume profile for that day. Or maybe it's I was going to switch up the screen and go to the other platform, but it's probably just easier for people to stay on TradingView. This is the volume profile for that day. So you have 3-day composite, rotation down, and then Friday, just a really strong move, very one-sided move, right? No real, look at down to the 5-minute chart, no real structure established. So strong day, but no base, and top heavy. So this is the kind of thing that in a bear market, a lot of times you're going to see folds on itself, right? You have some low volume regions where you'd expect price to, possibly tag into, to kind of correspond with the lows within the structure. But this is not necessarily the kind of structure that you want to build any kind of foundation off of. We talked about the last stream, we talked about market structure, good market structure being sort of like a retaining wall, right? And a distribution that's like this, where price is kind of covering the full range, filling it out. This is a good wall, right? This is a wall that is filled with stones. And then you have a structure that's like this on the profile. And these are almost like gaps in that retaining wall. Here are your bricks, big gap. Here are your bricks, big gap. Here are your bricks. Right? So if you were, and price is always walking forward, right? So if this is price and it's continuously walking forward and you have these gaps below you, well, it's not necessarily the best kind of structure to support your weight, right? So that's kind of what we have in terms of Friday structure. So the market right now is at 39.06. The S&P closed at 39.01. More often than not, you'll see that gap filled. I kind of, unless we really open tomorrow with a significant move above 30, what is Friday's high, 39,224. I would be cautious about getting long while we have this underneath us, right? Again, it's a strong move, right? We're holding the outside of value, really no pullbacks in this whatsoever, one-sided the entire session. But from a profile standpoint, pretty top heavy, not a whole lot that stands below us. And this is also mindful of the fact that this is over a 10% move off of the lows so far. So if it's a bear market rally, right, or even if it's whatever, if we're bottoming still, like I said, just expect that the market's going to move sideways more than it's going to move up. And that's something that I can let go of if we're trading back above, something like last month's point of control. If we're trading back above cleanly, 39,025, this black line right here. So just this, it's kind of, if you box this entire thing out, it's almost like that's perfectly mid-range, right? So from high to low of that move down, it's like what, 39.11. So not the best area, I think, to necessarily open up fresh positioning. And be mindful of the fact that this week we have the FOMC. So there's a lot of talk about the Fed needing to pause, and the pause is what is being interpreted as a pivot now. So a couple things. I think that when the Fed does signal that it is going to pause, or if it does, whether that means we get 75 this week and then they decide on some kind of pulling off in the following meetings, whether it's 50 or 25, I think that the market does really respond positively to this. Obviously that's not the same as what some people are talking about, which is them actually turning the spigot on again and printing again. I think that's like absolutely ridiculous to think of right now. Either way, when the Fed does change their language, right, when they do explicitly say that they are changing their course of action, you're going to get a good amount of time to enter into the trend that's going to continue from that. So I've been saying this for the last year now. Don't fade the Fed, right? Look for specific changes. I've said explicit changes in their language or their actions. And they haven't done really any of that yet. There was one meeting where Powell made a mistake. Equities rallied. Obviously, they weren't too, excited about that. But when they do explicitly pivot, when they change it, when they set a new course of action or a new plan for, pulling off of the hikes or reducing the hikes or pausing the hikes, you're going to have a good amount of time to enter into that move. The initial move is obviously going to be pretty inefficient. It's going to be very imbalanced. But my point is that's probably going to be a significant trend shifting move that'll have legs that people will still fade, but that you should be more comfortable with because that is something that represents some kind of somewhat of a regime shift, or at least a shift in what we've had for the last year. And a move like that, in my opinion, will have legs. And again, the same thing I've been saying about BTC, you don't have to buy the bottom, right? Confirmation is sometimes just the cost of doing business. So, for example, looking at ETH, because ETH is very clean. So before we were talking, I was mentioning just a few levels, and I was mentioning how ETH is at the highest volume node. The POC is below us, but for all intents and purposes, looking at the entire composite down here, Here's one HVN. Here's the second largest HVN. So a level that we're kind of messing with right now. The structure that could be the bottom is this range between 19,037, not 19,000, holy shit, 1,937 and 991. All right. Is it better to buy the bottom if the move ends up here a couple months from now? Absolutely. All right. Are most people going to be able to do that and hold for that entire move? No, very few will. Is it equally as good, at least for your psyche, to be able to get involved in a move that leaves this range, cleanly accepts above it, right? Absorbs above this level, and is outside of knowing then that this is going to have some kind of, lasting legs to it. This is the cost of doing business, right? Trading this region as a range, not necessarily buying everything with the hopes of this level breaking, and then treating this as a separate trade. And you could capture a lot that takes place within here. And then this trade is just a much more meaningful swing that you've added to, your larger returning trades this year, if that comes, right? But the point is, this market actually, I should clarify, when moves like this happen, whether it's that or whether it's something like this and then this, when you get a trend change, and we're talking about the primary trend now is down, right? But now we're within a much larger ranging structure. So a new primary move would be outside of this structure to the top side, right? In this case, the one I'm referencing. When you have this kind of shift, this move that follows often is pretty forgiving with allowing you to enter. You just have to not second guess it. All right, so as far as ETH levels though, again, I think this 18,000, this 1,800 level is, for all intents and purposes, the range high. All right, this is kind of your deviation. I think if you're above that 1,800 level, then it's on. Right now, we're, again, I think ETH is looking stronger than BTC. I haven't said this yet in the stream, so I shouldn't say again. ETH is looking stronger than BTC, right? We've made a significantly higher high in ETH. ETH BTC chart telling a pretty clear story. As far as market structure goes, not much of a base that is local, right? So you've had most of the last 2 months value being established around 14 to 1240. Similar to BTC, the last 2 months of value being a very clean range. We've broken to the upside, but ETH is higher beta. It's put in a larger move to the upside. It's left more of a gap. So we have a prior gap in this month. You have a gap now for the end of October. And while ETH is stronger, I just think you have to be careful because it's entirely possible that this entire structure fills out, right? If this is, if the Fed comes out this week and they mention something with relation to pausing or slowing down or anything that's any kind of improvement in what they've been doing, then yeah, we could start to see some really fast moves up that don't pull back much. But the way I'm looking at everything right now is, one, BTC looks kind of lackluster in terms of momentum. ETH has done what is expected in terms of being higher beta and putting in a larger move. And that if BTC is going to fold on itself, then ETH has more of a range to fill out. So between prior range highs around, around 14-ish, the daily low right around 1480. There we go. So if this ends up failing up here, I would rather get involved at a return back to this low. I think that this is the area the market needs to go to get the most people involved, because then you're sitting right above that gap. And, obviously the same as BTC. If BTC accepts within its own prior range, so if Bitcoin accepts back within this range, something like that, then I think that if ETH is still up here, that it's probably giving you some time to enter into the short that has been lagging at that point. If we're still up here, and BTC is filling out its prior range that we just left from, and ETH is still sitting, with either within the highs of this structure, or if ETH is suddenly now below this low, you just have larger ranges to trade for ETH. And the same, as BTC. That's your first rotation up. Pullback wasn't bad, but the second rotation up that we've had, we haven't been able to, a lot of times in a strong trend, at least you'll see that you'll have the consolidations that follow after the trending move. So trending move and then consolidation, you'll have mostly value overlap. So instead, we've had the move up and then immediate value migration downward. Almost back within, if you looked at this as a composite, the high, and you're just going to mark that value area high off. We're tapping on the high of this prior composite of a rotation we just came from. So rotation up, consolidation. Here's your second rotation, but it hasn't taken you much higher than this high, and we're already tapping the top side of that structure. So chances are, this is a prior composite, same kind of setup as BTC. If we end up losing for ETH, if you end up losing this, it's literally this level right here, it seems. 1575, 1574. If you start reaccepting back within these highs, I think that you're just going to start messing with these prior swing points. 1540. If you can't hold 1540, again, there's not much that stands in the way because this structure is not necessarily the most efficient structure. Doge has been something that if you're actively day trading, Doge is probably going to be good for a little while. So the thing about Doge is this blowout was probably due to the pair trade that a lot of people thought was a free trade. GCR shared or mentioned the trade. So essentially, normally you'll see that the relationship between SHIB and Doge is that SHIB is higher beta. So with this relationship, Doge blew out. So the trade would be shorting Doge, longing SHIB for that, to arb that, right? To close that window. So what happened is after this move up, and this obviously benefited by Elon taking over Twitter, Doge very narrative driven, very Elon driven. After this occurred, after the first move, you had people that were beginning to short this, placing that pair trade. So obviously, that set up a very nasty short squeeze. Do I think that this is anything more than that? No, not necessarily. So as far as high time frame structure goes, you could see that it's not abnormal for, and looking at previous cycles for Doge as well, it's not abnormal for you to have these massive pumps and then they just bleed out. So unless Elon comes on here and, unless he comes on here and says more with respect to Doge, I would just be careful longing this at this point. One thing that I thought would happen, so if you're looking at just market structure alone, this is a daily candle. Let's look at the profile for this. One thing that I anticipated happening, and this was going back to here, was that we would get a further squeeze up, and we didn't really get much of it. So one thing I said was, the market can adjust to the new move. The first thing that kind of looks like a blow off top. There's a lot of things that could look like a blow off top that aren't necessarily a blow off top, right? Blow off top, you're going to need to see a bunch of liquidations. You're going to need to see, spreads really blow out. There wasn't really much of that with this initial move. So what I was looking at was, okay, you have something that from a candle standpoint looks like it's possibly the blow off top. You're going to get a lot of people that are going to start building short positions. Looking at this on the daily, it's grossly overextended. This put in amazing moves. Like for anyone who got on top of it, shout out to you, because I haven't looked at my watch list, and my watch list doesn't have a bunch of shit coins all over it, low caps. I haven't seen something up 50%, 60% in a long time, in a 24-hour period. So what I was anticipating was, okay, you have things that are really, something that's really blown out. There's going to be a lot of people that try to jump on this on the short side early. And immediately for me, and again, this is not with respect to shorter term trades, intraday stuff. I just write this off as a swing that I don't care about, a short swing. So yeah, for all intents and purposes, how many times am I going to say that during the stream? It's like my go-to phrase. This has all the hallmarks of something that you would want to short, but it has the profile from a liquidity standpoint and a, herd standpoint of being the ultimate trade to blow out shorts, right? The ultimate asset to continuously blow shorts out, people that bet against us. So what I'm thinking is, all right, so people are going to be shorting, and we're going to get a much larger leg after this, and we're going to see that begin once we break that high, right? Tight invalidations are going to start blowing out. People are going to be closing out stops or shorts. People are going to be stopped out. We didn't have that, and instead what ended up occurring is on the break of that high. So we'll go to Coinalyze. Back up. So here's that initial move. It's a good amount of spot buying at first. Next move, big drop in OI. What I'm thinking of as this is happening after that high gets taken and there's not much of a squeeze. So for example, I got to zoom in. There we go. Sorry, it was hard to tell if you're not on the very low time frames. So looking at this high, thinking, all right, when we break this high, and there was a couple other exchanges that were slightly lower. Once we start cresting this 14 region, we should start to see open interest drop even more. Instead, what looked like happened was there was more selling and de-risking above that level. So more longs closing out. So this move down, and this move being also more longs opening up, there maybe not necessarily being a lot of shorts that were going to get squeezed. So I don't know if this is necessarily done. If we look at CVD, I would assume that it's not. I kind of am anticipating another move up. I think, though, that what I thought would have been sooner needs to rather accumulate. So instead, now you have a little bit more of that price moving relatively sideways, CVD trending down, predictive funding going negative again. So I think now you're going to start to see people kind of getting involved on the short side, and then we'll have another move up based on a squeeze. I'm not going to try to just predict the entire future, right? I'd rather be reactive. But as it is right now, this is the level definitely, I would say you definitely have to hold. I mean, if you look at this entire trending move, we filled out this inefficiency. I got involved on the long side a bunch of times, on the short side a bunch of times within this leg. It was great to trade. We've come down and fill out a good amount of that inefficiency. I don't know. You want to hold at least the trending day somewhat. So I think that today's POC, yesterday's POC, that 13 region, if you start to see us putting in a higher low above that level, that you could probably just target the highs again. And then at that point, at least you've had market come down, some signs of absorption down here below this low, obvious level to trap people. If we start breaking out of that consolidation, possible trigger point is actually a little bit more local. So something like this, this is pretty clean. Trap some behavior down here. POC is right here, actually. Oh, so that is the value area high. Excuse me. Yesterday's POC is up there. So you've trapped a good amount of participation. It's even better now. Most of the volume being done down here. If we end up trading back above 12, then I think that you're looking at, then it's that 13 point. So yesterday's POC. And then if you're holding 13, I think that you're just looking at another move to the high. But I think this is kind of the level you have to hold where we are right now. And there's not much that stands below us in terms of market structure or supports us. And I think that if you have a structure like this and this is your first red day after a vertical move, if you start pressing the body of this structure, where again, if you're looking at a profile, you see there's really not much that took place within there. You have this small little back and forth. If you start pressing that, I think the market's just going to respond by completely de-risking. Anyone who is long spot still, anyone who's still in good positioning from down here, they're not going to want to give up those gains. And there's not really much that stands in the way from a structure standpoint. Again, crypto, very technical, until you get down to 8 cents. So, you start to see this low breaking. You could see some panic selling come in. I'd probably want to still buy this though on the way down. I caught a really juicy short yesterday, right within here. So right from here down to here. My thing was, all right, so you had the selling that was coming in. I was looking initially for this to continue. I'd been long short within the structure, trading it like a madman. But I missed this entire move up. I didn't partake in the Doge move, so I made it back by trading. I didn't make the entirety of it back, but I made a good portion of that return. But as soon as this started showing that behavior above this high rather than continuing to squeeze up, once we started accepting within this high again, I pounded short, because what I was looking at was a very weak structure that a lot of times you're going to see just cascades through. So I ended up shorting into this move down. As soon as we started stalling for a minute or two, I ended up closing it out. But I still would rather, honestly, because Doge is it's so momentum driven, it's so retail driven, it is, narrative driven and very technical. After a big move, I'd still want to play for the bounces in this. So if we did, let's say, for example, my point is not to be long if we end up breaking below here. I would rather buy the blood down at this 8 cent region, right? Or whether we wick these, this 10 cent level, 10 being, 10 cents being a round number, pretty important level. The lows of this consolidation, the last bastion of support before you're back at the range high, and a level where you could imagine that there might be a good amount of stops to run from people that are still comfortably in position. If you're long, let's say that you bought this consolidation, and even if you bought the high of it, you're still sitting up, almost 10%. Chances are you start changing your behavior or changing your mind if we start approaching that. And I just think you could see a pretty nasty puke, but I would want to buy that. I don't know exactly where I would want to buy it, but I would want to be paying attention to that as it's happening. Put it that way. And I believe I was just stopped out of a Atom long. So I had a trailing stop on this for the stream. Yes, I was. Shucks. That's all right. I don't like to have open swing positions when I'm streaming, unless it's like a major spot position that I've already had built up. What were we just on? Solana. Now I don't know. Solana's been underperforming, but part of me does not want to take Solana off my radar. Just because of its, I think that Solana has more of a relation to SAM than FTT does. That might sound stupid, but I've said stupid things in the past. But Solana, in my opinion, I don't know. I think that it has major pump potential for some kind of, even if it was some kind of like echo bubble. Being that this was one of the major pairs, one of the darlings of the last cycle. So it's definitely something I want to keep on my radar. Again, not, a lot of things are doing this right now, and doing this means not showing a lot of strength. But it is the case that we're still within a range, right? So, I think the underwhelming thing that's happening is, I've talked about this, the diagonal support and resistances, these levels are not that significant. They do represent levels that I want to add to my analysis and look for maybe a change in momentum when we break them. But as I said before, we could break these moving sideways. We could break these if price didn't even trade and time just passed. If the exchange is turned off and we just kept printing minute bar after minute bar and it just moved sideways, you'd break those levels. What I like to see for diagonal levels is if the market's been respecting it for a long time, and this is kind of all eyes on charts, especially when you have a good technical setup, like let's say you've taken the lows of this entire range and then you're breaking above a local high and taking out that what has been governing progress down, there's a good chance that causes some momentum to come into the market. We haven't really seen much of that, but these conditions are completely different from any other conditions we've been trading in for the last few years. So that is something that is notable, right? It's completely different context, completely different environment. Does anyone have any questions? I haven't looked at the chat. Let me just look through the chat real quick. Really nothing that's going on during this open, huh? It's Sunday evening, so, but you could just look at CVD, pretty flat. And these again this is not time-based candles. We're an hour after the open and we've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Like 15,000 lots trade. And if you're looking at the DOM right now, there's really no activity taking place. Let me just blow this up. So I was sharing this earlier because it was on TradingView, and I like to share the platforms that I trade on and that I use. But if you're doing a stream on YouTube, sometimes you start losing people, right? Because not everyone has access to these platforms. There's paywalls behind it. A lot of the stuff that's available to crypto, there's some kind of subscription that you need. The base won't give you access to something that I'm charting. So a lot of times it's easier for me to just chart on TradingView. But if you're looking at this right now, the TPO for the ES, this is what I was talking about. This is your TPO from Friday, and this is your volume profile. Now, ideally, as the market begins to trend up, you're beginning to establish value higher. You're building bases as you move up. But this structure is stretched pretty thin, and you can see most of the volume actually came in around the close on Friday. There was a significant amount of volume that came in. I remember watching the tape, and it was just thousands of lots, but de-risking before the weekend. But most of the volume at the high, right? Again, very weak structure from a TPO standpoint. 9 times out of 10, 8 times out of 10, probably 7. You're going to see that in the following sessions that we come down and fill this out. So obviously we opened below Friday's close. We have a little bit of a gap that still exists between regular trading hours. We traded down to that though. But I don't know. I'm not as interested in what takes place on Sunday evening, even though futures open. I haven't traded. I don't think I've traded once. I don't think I've traded on one Sunday in the last 2 months. I could be wrong. I'm more interested in what happens tomorrow after cash session opens. And one thing I've been focusing on is the 1 minute range and the 30-minute range for the S&P. So looking at the 30-minute range for the S&P, if we're one-sided and one directional during that range, a lot of times what you'll see is if the market puts in a wide range for the first 30 minutes, that it's more apt to be sort of a range-like rotational day. Whereas if the range is really tight, that initial balance is really tight, and then we break out of that, a lot of times you'll see continuation off of that. So I've been back testing that just for some basic filters for certain trades. But again, this is all based on tomorrow's open. So even though we're open right now, as you can see, there's nothing taking place. And this is not really a filtered tape. It's just not moving right now. Oh, you can't even see the tape because I have this blown up again. I forgot about that. Just look at the activity in the order book. There's really nothing going on. I think if we look at something like, let me just put this down. One sec. Markets overview. I mean, the NQ isn't even moving. If we look at crude oil, really nothing going on. Any questions, guys? I'm just going to look through the chat right now. Oh, we got a bunch of people in the chat. Let me go all the way back. What's up, Mark? How's it going, man? Yeah, so listen, you just have to understand what you're trading if you're trading the ES and if you're going to start trading these products. And that's why I said I don't know how Prime XBT works, because most people would trade, when they say they trade legacy in crypto, they trade on Prime XBT, and it's like there's no volume listed, there's no order book, it's literally just, contracts for difference. So it's got an ugly spread. And you're probably able to trade individual contracts, like if you're trading BTC, where you could take whatever position side you want. But if you're trading actual CME products, again, you should know exactly the contract specifications, the tick value, the notional value. So for example, the S&P notional value is 50 times whatever price the S&P is. The NQ, so the NASDAQ, that's 20 times the notional value. So right now, the notional value of one contract of the NQ is greater than the S&P. If you're trading crude oil, it is 1,000 barrels. So if crude oil is, $89, it's, you could do the math, right? The tick value in something like crude oil is 1 cent for $10. So, things can get ugly really fast when you start trading a significant amount of lots. I think that if you're going to start getting into, and it's just, these are much faster moving products. That's my point. You could get offside really quickly. And I tried to make this point earlier, and it might have sounded weird, but because you never know, like you can never say with certainty. But if I'm offside in BTC, I kind of have an idea, like, all right, there are some tails that you might obviously have to deal with, that are the reason why I have like a tail risk stop. But I kind of have an idea of like, all right, if this probably is going to come back to my entry, I could probably scale out and reevaluate this position without worried about it blowing out against me. Whereas if you're trading the NQ, if you're trading the ES, these things move really fast. And again, they move sometimes so fast that Bitcoin doesn't even adjust to them. We see that more recently on lower time frame action. And it's not the same kind of setup as trading, futures products in crypto. You can actually go into bankruptcy and owe money and be in debt for being on the wrong side of trades. So you have to keep in mind, your margin requirements, maintenance, initial, and and understand how these products trade. Understand all the specifications, contract value, yada, yada, yada. What else was I going to say? I was going to say something else. Go through the chat again. If let's say you get into trading, you want to trade the S&P, I think that you probably should just start with something like the micros. So the micro E-mini is 1/10 of the S&P. So if you're trading, again, one contract of the S&P, you're trading $200,000 position, basically 196, 200,000 notional value. If you're trading the micro, that's 1/10. So you're looking at like 20,000, right? Roughly 20,000 notional value. So I think that most people are not going to be tick scalping and that precise. And if you're looking to trade the S&P, most people are probably trying to come here. And if they're trading crypto, they're going to try to swing the S&P. It might be better to use a micro product where you can scale in and still have a meaningfully smaller position. So if I just long one lot of the micros, that's really nothing. One tick is $1.25, right? So if it moves against me 5 ticks, you're looking at what, $6.25 against you, $6.50. Whereas again, if you're 5 ticks in the S&P on one lot goes against you, you're down $50. And that's the point, is just to talk about one lot. If you're trading more than one lot, then just multiply that by whatever value you're trading. All right, so another detail about the S&P. Or no, we're just, because I'm looking at the ES right now. The costs. Crypto fees are absolutely disgusting. So if you're trading, let's say you're trading a 100,000, let's equate them, right? So let's say you take a $200,000 position, contract value position, notional value in BTC futures. You're going to pay, and this is just back of the envelope, very rough. Your fees are probably going to be $200 plus. So you mark it in, you mark it out. Your fees alone, so maybe 5 to 7 basis points, are going to probably equate to around, we'll just say roughly $200 to mark it in, mark it out. Probably around 3, maybe even 4. I can't think of what that exact math is. The point is, it's high. That's to mark it in, that's to mark it out. That doesn't account for any slippage. So the larger your position, right, the more you're going to have an impact on the book. So you start trading 7-figure positions, you got to really think about how you get in that position, because you're starting to, it's starting to really add, take away from your bottom line, especially if you're trading a lot, if you're trading frequently, if you're a scalper, you're going to be more transaction cost sensitive. So Bitcoin fees are like 100 times greater than fees if you're trading CME futures. So my fees to trade this, ES, we'll say round trip, are probably around $3. So if I mark it in and mark it out, mind you, I don't even have to think about liquidity. My size doesn't have to think about liquidity in the S&P. You can hit the bid in the S&P for, let's just say, the 50-cent increment right now is around, we'll say it was 44, just blink 44. So within 50 cents, you're looking at, no, wait a second, 50 cents, 44 lots times 200,000 notional. Within 50 cents, you're looking at around $8 to $10 million in depth. Just, again, no one really talks about this in these values. You normally just talk about it in lot sizes. That's this right now. So within one tick, you're looking at half of that. So one tick, you're looking at up to let's say $5 million, as your notional contract value position. That probably sounded funny. Sound like I'm having a little bit of a diarrhea of the mouth, or what is it? Getting tongue-tied right now. My mouth is dry. Excuse me. I haven't had anything besides this club soda that I've been nursing. And when you talk a lot just to yourself, you start talking really stupid. Trust me. So I got to get some people on these streams, because otherwise I'm going to go insane. So this is after hours, right? This is not even normal regular trading hours. around 8 o'clock in the morning tomorrow, my time, right? So New York time, you're going to see this really thicken up. And then you're talking like, you could slam, like I said, I'm watching 100 million, 150 million hit the book and have no impact. And what I mean by no impact is you'll see 1,000 trade at the bid or 1,000 trade at the ask, and it's within a 25, it's within one tick, right? It's absorbed in one tick. So from a slippage standpoint, it's non-existent unless you're a massive fund, right? And then you have to figure out ways of masking your footprint and getting in and out of positions effectively, getting out around VWAP, getting in around VWAP, right? But the fees trading this are insanely low compared to Bitcoin. I should just say that trading crypto, the fees are insanely high compared to everything else. It's basically robbery. Just going through the chat again. What's up, Dave? SHIB is high beta. So what I mean by beta is, well, beta is basically just a measure of risk. You can think about it as a measure of volatility, though. So now, if you're a portfolio manager, you're going to think about beta more like risk. But just very simple terms, when we compare things, a lot of times we compare them to a benchmark. So most stocks are going to be compared to the benchmark of the equity markets, which is going to be most commonly the S&P 500. So we say that the S&P 500 has a beta of 1. So everything is going to be measured in relation to the S&P's beta, so the S&P's volatility. So simply put, certain things have more upside capture and more downside capture. Mostly things that are higher beta have more upside capture and more downside capture. And if the S&P has a beta of 1 and Facebook has a beta of 2, very simple terms, you could think about it as if the S&P moves at 1%, Facebook moves up 2%. If the S&P had, for example, if we're talking about something that has a beta of 3, if it has a beta of 3 in relation to the S&P, if the S&P moves up 1%, that thing moves up 3%. Now, there are some things that have different relationships, right? They notably have more upside capture, less downside capture. So they are outperforming the S&P in both ways. So if the S&P moves down 1%, they move down less, right? But they still move up more. So there are different, obviously there's going to be a lot of very specific cases of this, maybe not necessarily existent right now because everything is underperforming. But when I say beta with crypto, Bitcoin is, we think of Bitcoin as having like the beta of 1, ETH having a slightly higher beta than BTC, and then everything having a higher beta to those two. So if Bitcoin moves up, 10%, a lot of times alts move up what? They move up 15, 20, 30%. So the beta relationship between Doge and SHIB is normally that when Doge moves up, and I'm just going to say this for example's sake, 10%, SHIB moves up 20%, right? So the beta it's like a 1 to 2, right? Doge has a beta 1, SHIB has a beta of 2. That's not the case though, because the reality is Doge has let's say a beta of 4 in relation to BTC, and SHIB has a beta of 8 compared to Doge's beta of 4, which is 4 times greater than Bitcoin's beta, which is a beta of 1. So this is it's a lot more, it gets a lot more complicated, but just imagine that it means that if one has a higher beta than the other, it's going to move up more and down more than whatever move the other asset puts in that it's related to. I'm just going through the chat. Aptos. I don't have much of an opinion on Aptos. I haven't traded micros. No, I just trade the regular E-mini. It's not actually, micros aren't bad. If you look at the volume, it's significantly high. If you're a smaller trader, you're not going to have a problem with it. Like most people in crypto are not going to go trade micros and have a problem with liquidity. For some people getting involved with futures, I would say they should start with the micros because it's going to track the underlying price 1 for 1. It's just going to be that you're able to take smaller position sizes. The trouble with micros, and I'm going to just tell you this right now, is that the relationship between fees for the micros and the position sizing is not beneficial to you. So it's not like your fees drastically go down for the micros contracts. It's sort of like what you would expect when you buy more of something. You get slightly more in the package, right? If you buy, it's sort of like a baker's dozen, right? You get more than a dozen. So if you opt for the larger product, you get a little bit more at a discount. So that's, I'm trying to make an example with fees. If you're trading the micros, you're trading something that's a tenth of the size of the E-mini contract, but the fees are not a tenth. They're like half, right? So if you trade, let's say you wanted to build a position in micros up to the size of one contract in the ES, you'd get to about half of that size before you're actually paying more in fees. So you actually need more of a move to justify trading micros from a fee standpoint to actually eclipse your fees. So your fee to, price tick value ratio is less attractive. So most people, if they're trading using the micros, one, if they're trading because they're smaller, two, they want to trade the micros to scale into swing positions. Now, if you're coming from trading crypto, you're already used to getting raked over the coals for fees anyway, so it's not going to be that big of a deal. But if you're going to be an active trader and trading a lot, if you're trading the micros, you need bigger moves to actually become profitable. If you're just, trading here and there and not really taking much out besides ticks, but you're trading a lot, right? Because remember, it's based on each contract. So you're not paying you're not paying, a fee for the 10 lot that you bought. You're paying that fee value per one lot times 10. So people might be up without fees, but once you add in the fees and take those out at the end of the day, you get your brokerage statement, from your FCM or your broker, and you'll see that you're actually down because your fees, you traded so much that even though you were profitable on paper, you took so many trips that you completely ate up those profits and fees alone. I don't know about Bitcoin CME contracts. Last time I checked, it wasn't that bad from a liquidity standpoint. It's 5 Bitcoin per contract. So there were times when there was actually a very significant amount of volume being done that it didn't look like it was being done on the CME, but reality it was. But after the bull market, it's really taken a drop. I think it's like 20,000 contracts traded a day, which is very light. Fees are per contract. Yep. All right, I'll take a look at Aptos real quick. I mean, there's not a whole lot that I want to cover during the stream. It is Sunday. Just wanted to take some questions, hop on, give you guys an update on the competition sign up, which is, again, shout out to Phemex. I don't know if I did say earlier, right? Yeah. You have like a few hours left if you want to sign up. Aptos. I mean, anyone who's been following me for a long time knows what I feel about new charts that look like this. Unless it arrived at the perfect time, almost all charts that begin like this go through a long period where they bottom out, right? Where they distribute from people that are involved, and it's just going to make this really simple. There are people that are in this already that can take this move and still be up 1,000%, right? 1,000 times even, 10,000%. 100,000%, just for the, I know it's hyperbole, but maybe it isn't. I don't know who's a seed investor in this. But the thing about this is you're looking at the chart and you're making judgments off of this alone, not realizing that there are people that it's so new that are involved that are up already tremendously that they don't look at, this level on the chart and think this is a great support level. I'm going to hold out for that bounce. They're thinking I'm willing to sell anywhere because I'm already up thousands of percent. So I just think that all charts that look like this in the beginning, yeah, they're long-term wise, I don't want to touch them. Unless, like I said, it arrived at the beginning of the bull market. It's perfect timing right now. I don't think that's the case. I think that they all go through. And if you look at all the pairs, Solana pairs, if you look at all the new coins at the beginning of the bull market, or rather the middle of the bull market that came around, if they started like this, they all ended up doing something like this, right? And then maybe all this got left behind and you ended up making a whole new trend up. But it all, you have to get all those initial hands out. And they are not, again, you think, you might think, we're at the only level on the chart, the market, it's down 60%, like it has to be a buy now. And it's like, no, this is down 60% here, right? But they got involved at a seed price that, puts them all the way down here. I'm just trying to grossly misrepresent this to make a case for how up early investors are and how little they care about if they're selling here 50% lower, because it's no difference to them. All these new pairs, though, tend to be good pairs to trade. From a market structure standpoint, you already got your few trades off of the top side of this range. I would just wait for this to move lower and see what kind of reaction we get around the 6087 level. I'll probably forget about this, though. This is not something I'm really going to be focused on until it puts in some kind of longer term bottom, or I don't know anything about it. So all right, guys, probably going to wrap it up. I normally don't hop on a Sunday stream. I felt like it'd be a good opportunity. Really nothing going on, though. Again, the ladder in the ES says it all. We're not even... if you look at just the pulling and stacking column, the delta on both of these, the bid and the ask, no one's adjusting. There's like nothing taking place. Everyone have a fantastic evening, though. Thanks for tuning in. I think I covered everything. Really not a whole lot to go over. The best level for me for BTC, because I've been saying this now, like there's all these little trades that exist within here, range trades within this micro range, intraday plays within here, acceptance above here. I was thinking we'd get a bigger move up faster. But if you just want to keep it simple, and we'll just eliminate these. High to low. And then putting on a profile just to show you again where these high volume nodes are. Right? The midpoint of the range. And if we're above mid range, right? So if we're above like 22, you're above where most of this distribution took place. You're above all the HVNs, and then you're above mid range. I think you have a longer shot at that point. A bigger trade ahead. Possibly the same way that we filled out. Again, this is one large range. But then you have these little carve outs that can take place within. So above mid range, I think sets up for a bunch of good opportunities to the high. But I think it's possible we might get capped off a little bit before then and move sideways some more. Now, keep in mind, like I said, or I'm forgetting to mention, we have the FOMC this week. So could see some lackluster behavior because of that. Like not a lot of people want to be long into that, I would assume. So after that, react to how the market responds. That's it. Oh, sorry. Hold on. I'll just go over that real quick again. It was very simple stuff. One large range, but broken down. Mid-range leaves you with two ranges within, right? Now this level right here, as I said, is the second highest volume node within the structure. POC is now down here. We spent the most time down there. Thought that the move from here to here would be more rapid and we'd get a larger move. But if we end up cresting above 22, 21.5, there's probably a longer set of trades or better set of trades up to the range high. And we probably end up filling out that structure the same way we did down here. So we're just ranging within the larger range. All right, guys, that's it. Have a good evening. Catch you guys tomorrow. And